Good morning, everyone, and welcome to S-Bank's Q1 Results Webcast. My name is Riikka Laine-Tolonen. I am CEO of S-Bank, and together with me here in the studio is Mika Heikkilä, our CFO. We are happy to answer your questions, and you can present your questions by posting them to the system. We will answer those after the presentations. S-Bank had a strong start for the year. Strong growth and performance continued. Let's start with some highlights. Our operating profit was 42.8 million euros, showing almost 70% increase versus Q1 last year. Behind this is strong net interest income, which was 79.6 million euros. Our lending base grew to 7 billion and deposit base to 8.2 billion. The strong operating profit also supported improvement of capital adequacy ratio, which was 19.7%. We saw growth in many respects in line with our strategic goals. One of our strategic objectives is to grow the number of active customers to 1 million active customers. There was great progress in this number in Q2 when the number of active customers reached 675,000. Regarding our strategy implementation, this year's main initiative and focus is the successful integration of Handelsbanken businesses to S-Bank, and this transaction is progressing as planned, and I will discuss this a bit more detailed level later in this presentation. Overall, strong start for the year, and I want to thank our customers, employees, owners, and investors for the successful quarter. And next, move to our guidance, which we have kept intact. Our guidance for this year is negatively affected by three factors. First of all, Handelsbanken transaction will generate costs related to integration and financing that will have an impact on our operating profit. Secondly, interest rates are expected to settle on lower level compared to previous year. And thirdly, we can see that the uncertainty concerning operating environment, economy, employment, and real estate continues. And all in all, to summarize this, we expect that the operating profit would be declining by approximately a quarter this year compared to last year. Let's now look at our business segments on a bit more greater detail. First, the banking segment. It represents our biggest driver for results and profitability. All in all, interest in our services continued on positive track during the first quarter, and we see very positive numbers when it comes to income, volumes, and development of customers. Operating income of banking segment was 93.3 million euros, and it grew with 34.5%. This led also to strong operating profit development. The operating profit was 43.7 million euros. Both deposit portfolio and lending portfolio grew. The deposit portfolio grew to 7.5 billion and lending book of household customers to 5.8 billion euros. As we can see, the total housing loan market in Finland is declining. The latest data from Bank of Finland reports in February that the 12 months development has been negative with 1.7%. During that period, we have been able to grow. Our housing loan volume grew to 4.1 billion euros, and the growth was 1.9%. This is, of course, not a big number, but it shows that we are able to attract new housing loan customers, and this is a signal that more and more customers consider us to be a relevant first bank option for them. Customers are also actively using our services, and that we can see that we are strongly part of our customers' daily lives, and the purchases of S-payment cards increased by 13.8% year-on-year on first quarter. And next, wealth management. where we saw growth in net subscriptions and number of unit holders. Operating income of wealth management was 10.2 million euros compared to the corresponding period last year. Operating profit was 400,000 euros, and there we see already a slight impact of development costs related to Handelsbanken integration. I'm glad to see that our customers are using our savings services more and more, and the net subscriptions to S-Bank mutual funds amounted to 75.6 million euros, and the number of unit holders grew to 405,000 holders. Asset under management was 6.4 billion at the end of March this year. Some highlights of our strategy execution. First of all, our board of directors confirmed S-Bank strategy end of last year, and our strategy continues towards a more customer-focused and digital bank. This strategy shows ingredients how we can continue the the profitable growth by offering our customers superior ease and benefits, and our purpose is to offer a slightly better financial future for our customers who are, as the focus customers, also corporate members of S Group. There are three main key change areas how we execute the strategy, and those are Handelsbanken integration, renewing our service model, and also improving the scalability. And then a couple of highlights of the strategy execution in Q1. First of all, we have made solid progress in servicing our customers, and especially the digital interactions are picking up momentum. S-Mobile, which in a unique way combines our services with S Group services, reached 2.2 million unique downloads in Q1 this year. And also we see highest amount of weekly users, almost 1.4 million users. We are also happy to see that the customer satisfaction is on excellent level in our key customer service point. And of course, very important service for our customers is the call center. There we see improvement in satisfaction. In April, we also there happened a significant and eagerly awaited new feature was implemented to S-Bank's digital services when Apple Pay was launched as a part of our payment portfolio. Thus, it's possible to add a contactless S-benefit card, S-etukortti, to Apple Wallet. This is a unique combination of payment and benefits in the same wallet. Customers have welcomed this new feature very warmly, and we are proud of a very successful launch. Strong customer adoption exceeds our expectations. We are obviously very happy and humbled about this. In relation to our strategy, the Handelsbanken acquisition is of course the thing for this year, and it will enable us to grow to the fourth largest bank for household customers in the Finnish market. I'm happy to report that things are proceeding as planned. We have now confirmed that the migration and transition of customers is confirmed to happen turn of November and December this year. The communication to the customers has been started by Handelsbanken, and this has gone smoothly. As we are now building a new service model for S-Bank based on both bank strengths, we know that Handelsbanken customers are extremely pleased with their own relationship persons. We want to make the transfer as smooth as possible to join S-Bank. We can now confirm that the one key ingredient of the service model is that the customer relationship managers and branch offices that move to S-Bank continue to serve customers as a part of S-Bank. Financing for the deal is progressing also as planned. The transaction is financed through a share issue to owners, and debt financing from the market. As a part of our 3 billion bond program, we have issued two 500 million euro covered bond. The one was in September last year and one April this year. Both bonds have been well received by the market, oversubscribed, and to me this reflects also confidence on our plans. The share issue is planned before closing, and shareholders are committed to the share issue up to 200 million euros. S-Bank is fully committed to maintain adequate capital and liquidity position during and after the transaction. One step on our strategy journey was also taken in the beginning of April this year when new management team and organization of S-Bank took place. This change is establishing a clearer framework for more customer-oriented service and digital development, as well it is also preparing for customers and personnel coming from Handelsbanken to S-Bank when the transaction is completed. And we are also strengthening our business risk management. New roles on group management level are Head of Banking, which is Iikka Kuosa, Head of Customer Relations and Brand. There we welcome Anni Hiekkanen to S-Bank, Chief Technology Officer Niko Mikkola, also warmly welcomed, and Business Risk Officer Jarmo Parkkonen, very warm welcome. And you can also see that there's Mike Peltola joining S-Bank from Handelsbanken. He will join when the integration is finalized. He, of course, represents good continuity also for Handelsbanken customers. Mike has strong capabilities and record in leading Handelsbanken's wealth management in Finland. Also, Niko will join a bit later this year. At the moment, we expect that he will join the team latest beginning of August. Until that, we of course have good experienced acting heads in place. To summarize my comments, S-Bank is well positioned to grow in a challenging environment. The external competitive environment it is not offering too much tailwind. On contrary, I would say that it's more headwind at the moment. All in all, the uncertainty in the global and Finnish economy continues, and customer confidence is low. Even though in big picture there is light in the tunnel, the inflation is easing and interest rates are to be expected to decline. But this positive impact is at least so far offset by low confidence. And then, for instance, we can see that the housing transactions are at its lowest for many years. There's intensive competition in the market, which is of course positive. We can see competition of customers, but also especially in deposits. And of course, customers are expecting more and more from their banks, and there's growing demand for easy-to-use services and financial advice in these circumstances. We have a solid base to build on, and there are a couple of proof points of that. We are in a very unique way combining banking services and S-Group services for covered members, and we can reach that large customer base very well with our digital services. There's a very easy-to-use mobile app, which is a unique service channel for customers. Our profitability has improved and our capital position is solid. We have also proven track record both in non-organic and organic growth. We are attracting more and more active customers. We also enjoy strong stakeholder support, both from owners, but of course also from customers and not of course least employees' satisfaction is strong. So this is the growth story, what we want to continue. To summarize in numbers, we are progressing well towards our strategic goals. We had a very strong start for the year, strong growth and performance continued, and our guidance remains intact. The operating profit was 42.8 million euros, and it is well in line with our targets for this year. Here you can also see that on the other chart, what are the strategic targets for the strategy period. And there you can see that with active numbers of customers, we are also well on track. We reached the 675 active customers end of this quarter. The return on equity, 21.4%, is also very well done. And of course, you can see here then the target above 10% for the whole strategy period. And lastly, while we are growing, we are also managing our costs, and the cost-income ratio for the quarter was 50%, and it is well in line also considering the whole strategy period target, which is below 60%. So this concludes my comments today. Happy to answer questions after Mika's presentation. I will now give over to you, Mika. You will discuss the financials more in detail.
Thank you, Riikka. So I will continue here, and first on the left-hand side, you can see our total income by quarter. So it was 104 million in first quarter compared to 80 million on previous year. And also we can see here that we still have a slight increase in our net interest income in this period. So we have grown in every quarter since 2022 in net interest income. On the right-hand side, we see our operating profit by quarter. So it's quite in line in first quarter too. So when we compare that to Q4 and Q3. Here in this slide, on the left-hand side, the split of income and cost analysis. So the total income was up 30%, and the total cost were up 12%. On the right-hand side, our income split by segment and different income type. So as the net interest income has grown, we can see that the banking segment is still a little bit higher or bigger in this period. So it was 90% of the total income, as it was 87% on previous year. And also by different income type, we can see that the net interest income was 77% of total income. We have very strong key figures also in cost-income ratio, as Riikka told, which was this 50% compared to 69% on previous year, and also very strong total income to total assets, which was 4.1%. From deposit base, just highlight that the total time deposits at the end of March, they were 638 million. And if we look those different portfolios, so household customers portfolio grew 3.9%, and the corporate customers decreased by 5%. Total loan book is also growing, and household customers was this 2.4%, and the corporate customers 6.7%, so totally this 3.2%. And with the asset under management, so it also grew by 7%. Especially we can see that the fund capital grew by almost 11%, and the wealth management capital was a little bit decreased, but totally this 7% growth. With repayment holidays, it's quite stable development here. It's a little bit declining trend in the share of those loans which are under repayment holidays. But on the right-hand side, we can also see that the amounts, they are quite stable, over these different quarters and periods. Credit losses totally, and it was 5.9 million compared to 5.2 million on previous year. So we didn't make any extra provision based on management judgment in this period. Also, we can see that the non-performing loans ratio is slightly higher in Q1, so it was 1.4%. And with balance sheets, the major change in this period was that we issued one senior preferred bond in Q1, which was totally 300 million. So if it affected on the total amount of balance sheet, which was 10.3 billion. Also, the capital position is very good. So total risk exposure amounts, they were at the same level as they were at the end of last year, so 3.6 billion. But at the same time, our own funds grew to 700 million. So in that way, the capital position was strengthened. Also on the right-hand side, you can see the MREL requirement levels. So the total requirement is over 800 million, but the own funds and eligible liabilities are 1.3 billion. So it means that we have almost 500 million buffer there. Our equity ratio was 6.7% at the end of the period. And also on the right-hand side, you can see the capital adequacy ratios. So the total capital adequacy ratio was 19.7% and CET1 ratio was 17%. We have a strong liquidity and investment portfolio. It was totally 3 billion at the end of March. So we can see here that the major part of that we have a cash in central bank or deposit in central bank. It was 2.3 billion at the end of March. And also from liquidity, level 1 assets, they comprise 93% of the total portfolio. And the LCR ratio was up and it was 295% at the end of March. And last page, our key figure summary. So we have had very strong growth in our operating profit and it continued also in the Q1. We have grown very balanced over the years and still our loan to deposit ratio is 86%. We have very substantial improvement in the cost to income ratio and strong growth in return on equity and return on assets. And finally, we have very robust capital base at the moment. So that was last page from my side.
Thank you, Mika. And now I can ask if we have any questions.
We do not have questions at this point of time.
Okay, but then we thank you for your attention and wish you a very good rest of the day.
Thank you.